Welcome to 15-Minute Fundamentals, where we break down crypto projects and learn about the drivers behind the data you see on our charts. Today, I'm joined by Julian Koh from Ribbon Finance, a protocol that helps users access crypto-structured products for DeFi. Hey Julian, welcome back to the pod. It is yet again great to have you on.
Cool, thanks for having me on for the second time.
As a background, for anyone listening for the first time, last time you were putting the final touches on a new product category called Ribbon Earn, which has now been live for some time, after which you've also introduced a credit product called Ribbon Lend to target institutional investors. And as that's not enough for 3 months, putting out 2 new products, you've most recently announced an expansion to the exchange space as well with Aevo, so your proprietary on-chain options exchange, and really looking forward to diving into the details behind everything there because it's been a pretty busy 3 months. But before that, I just love to hear what the general vibe has been over at Ribbon, especially in terms of like building in this bear market, and maybe what's your general sentiment on everything that's going on in crypto lately.
Yeah, I mean, even though it may seem like it's been only 3 months, honestly, a lot of this stuff has been in the works since like Q1 of this year. So we've sort of got somewhat lucky with timings. Like the last, I don't know, 3 to 6 months has been pretty quiet in crypto. So we haven't really felt like any pressure to release any of these things, so we could sort of wait till they were done, and we're just announcing a lot of the stuff that we've been working on for a while. I mean, we have launched 2 of the 3 things that you mentioned just now, and in the last month those 2 products have gotten like pretty good traction, so I think we are pretty happy as well with like how they've turned out. But obviously it's still early days, and yeah, I mean, we'll see how big these things can get in the next few years.
Yeah, awesome. And let's start with Ribbon Earn, because out of these 3, that was the first one that came out. Can you just explain what it is and how it works, the general stuff, and then of course what the main innovations are that Ribbon Earn brings to the market?
Yeah, so maybe stepping back a bit, like our most popular products, or like our original product and what we are most well known for, are these like DOVs. And how these DOVs work is you get paid these premiums for selling potential upside or potential downside in an asset. So you sell a call option or you sell a put option and you get paid some premiums. But these products obviously are not risk free. So if the price of the asset goes up a lot or goes down a lot, you could lose some money. And I think in a bull market, people are like happy to take that risk. People want to juice out that additional APY on their assets. But I think in a bear market now, a lot of people are sitting in stables. They don't want to take market risk. They have no view on whether ETH is going to go up or down a lot. They just want to be market neutral. So we started exploring a bunch of new product categories which basically don't have the same type of exposure to the market as our DOVs. This category of products, which is what we call Ribbon Earn, it's like even if the price of ETH goes down by 50%, you don't lose your principal. I think that's sort of the main reason why we called it like these principal protected products. And how it works is every single week, instead of sort of selling these call options or selling these put options, Ribbon Earn takes users' funds and lends it out to institutional market makers to generate some base APY. And it takes some portion of that interest and buys these short-term call options and put options. So why that is interesting is because if you just lend out your funds, you get paid like a stable rate over a few months or whatever. It may be not so interesting to users. But if you buy these short-term call options and put options, you can actually monetize some of the intra-week volatility. So sometimes you get paid out like a bonus of what your base lending rate is, because sometimes these call options pay off. And we did a back test of this strategy, and about 50% of the time, these options like pay off more than the base rate. So, we thought this is like an interesting product. A lot of our users like basically coming back every week and looking, okay, did I get paid these premiums? And we thought this is like a nice combination of both like lending and like an options product. And we made it really simple, and we think this is a bit more of like a all-weather type of product. You don't need to be super bearish or super bullish on the asset to choose a side. It sort of just works in either type of market environment. So yeah, that's how it works. We've launched it a month and a half ago, and we have about 11 mil of TVL right now. So products sort of grown quite fast as well.
Yeah, that's great. And Earn sounds like a product that definitely has a more mass market appeal. So you will be entering a much more competitive market there. And on that, how do you see the increase in competition affecting your approach and especially go to market plans?
Yeah, so I think we also just realized like maybe we haven't seen that much growth in the DOV space. Maybe that's part of like a function of the market not being so hot right now. People are not really that keen on selling calls or puts. And I think we had to go more into this like mainstream sort of stablecoin yield space. So yeah, I mean, I think we have pretty good distribution. Like we already have like a pretty broad set of users who follow us, who have used our platform, and I think now it's sort of more about okay, how do we expand into these new categories using our distribution? So Ribbon Earn was like one of our first experiments like outside of the traditional DOV space.
Got it. And great to hear that it's been growing fast to the stage where it is at now, especially in a bear. That's always a good sign. On to the next one then. Ribbon Lend was a bit of a surprise for me when I heard it's coming out, which is a really cool addition to your product suite. But could you speak a bit about kind of what got you to build that product, and then the same question, so how it works?
I'm glad we went into like this order of like what how the products work. And when we talked about Ribbon Earn, one component of Ribbon Earn is it does have a lending component as well. It has like a lending component plus an options component. And we were thinking about okay, how do we actually do this lending component on chain? Like, do we build our own thing? Do we like plug in into Maple or some of these other guys? Like, how should we architect this product? And strategically, we were thinking about okay, maybe it makes sense to plug into one of these other lending protocols. But we were sort of thinking about this stuff, and it sort of made a bit more sense to own like the lending piece as well. Like, we have this product, Ribbon Earn, which we know for sure is going to drive like a good amount of flow to a lending protocol. Do we necessarily want to send that flow outside of the Ribbon ecosystem, or should we just like send it down to our own protocol? So we thought, okay, it probably makes sense to just do it ourselves. We don't think like the uncollateralized lending space is super competitive now. There's no like clear runaway winner like Lido in the liquid staking market or Uniswap in AMMs. And we thought, if there's no real runaway winner, maybe we can actually be that winner in this space as well. So why not take a shot at building it? So yeah, that was the main genesis of the idea. And we decided to build it maybe 2 months ago. And yeah, we have shipped it pretty quickly.
And what would you say Ribbon Lend's kind of main value prop is compared to the existing institutional credit protocols?
In like an institutional credit protocol, there's like the supply side and the borrow side. Historically, it's been like pretty easy to get the lending side because in a bull market, everyone wants yield is basically free money on the lending side. But now in a bear market, it's like really hard to attract those deposits. Like you actually need a lot of incentives, or you need like a good reason why people want to use this protocol. So in the Maple Finance case, the structure of how the protocol works is like there are all these lockups and stuff. Like those things add a lot of friction into people deciding whether they want to deposit into these protocols. So the way we have designed it is that there are no lockups. It uses like this utilization curve where we optimize for about 85% of the pool to be borrowed out by the borrower, and about 15% of the pool is sort of left as a liquidity buffer. So if you're a user, you have, I don't know, 500K on the platform, or 100K or something, as long as you're not like more than 15% of the pool, you can have almost like instant liquidity. So we think that is like one of the major benefits of using this model. And in the current market environment, we want to make it as easy as possible for lenders. And this is like a big reason why they want to use it versus something where you have to lock up your funds for 3 to 6 months. So yeah, that's like the main model behind it. And there are a few other things as well. Like instead of having these pools where there's like a delegate of the pool who basically decides where the money goes, we are using this idea of like single borrower pools. So there's like a Wintermute pool, there's like a Folkvang pool, there'll be like a Alameda pool, and so on. And we think the current power users of DeFi, they know these names. People already have like certain confidence in different trading firms. And I think people want to know, okay, I'm lending directly to Alameda or something. And these are like the types of decisions that we think our main users want to make. So yeah, those are like some features of how Ribbon Lend works.
Got it. And then looking at the business models of these two, so how these new products affect Ribbon's revenue streams. Correct me if I'm wrong, but with Ribbon Earn, the model is very similar to the DOVs beforehand. So you take a cut of the yield generated,
Yep.
and then Lend brings a new type of revenue stream for Ribbon, right?
For Lend, the protocol takes 5% of the interest generated on the platform. So it has a very similar business model to Aave or Compound, where all these protocols basically take a cut of the interest paid. We haven't done anything too crazy there. I think for now, our fee is 5% of the interest, which is pretty much in line with all the major money market protocols. If I'm not wrong, I think Aave might even be 10%. I need to go check again. But yeah, that is the business model for Lend. For Earn, we also do have like a very similar model where we just take I believe it's 10% cut of all the yield generated on the platform. So in the DOV products, we have like a management fee and like a performance fee. In Ribbon Earn, we don't have a management fee, so we just take a haircut on the yield.
And now there's the two products that are now live covered. Really, really great to hear that they're getting some traction. And then we move on to the third one, which is also very exciting. And another one that surprised me. I think this is what you were referring to 3 months ago as a top secret product that you couldn't speak of by name.
Yep.
But a couple of weeks back, you announced Aevo. I would love to hear how Aevo fits into the suite of Ribbon's broader product portfolio and why you saw the need to build your own exchange.
Basically, we think like the product set has sort of fragmented into two main categories, I would say. One of them is more of like the on-chain structured product category. The other part is more of like, it's just like more options related. And we think like Earn, DOVs, and maybe even Lend sort of fits into like the on-chain structured product piece. And Aevo obviously sits quite nicely within like the options piece. The main reason why we wanted to build this was because we basically saw a lot of competition in the DOV space. Like in Q4 of last year, Q1 of this year, you know, there were like all these forks, all these competitors doing like very similar things. And realistically, all of us were like trading against the same 10 big institutional trading firms. So we had to really think about, okay, why is our product going to be superior long term? There's no reason why any of these DOVs, including us, will have like a advantage on sort of execution. So we thought, okay, everyone's going to get the same price from all these market makers. Then maybe like, is it really like a fee game in the end? Like our fee is going to compress to zero. We thought that is like a very big possibility. And lastly, we think, you know, it's just like brand and track record. I think we are like probably the best brand and the longest track record. So we were winning in the brand space. But we were a little bit concerned about, okay, if fees go to zero, like we need a different way to like generate revenue. So we started looking at like how we can vertically integrate our vaults with something else. Like maybe we build like an options protocol. The rationale there was like, okay, it's difficult to actually make money on like a pure on-chain options protocol. Like the protocol that we currently use, Open, takes like zero fees. Like it's not really a valuable part of the stack. So I think we played around with a few ideas, and one idea we had was like, okay, what if we could actually build like a fully featured options exchange like on chain and basically redirect a lot of the option flows from these vaults into the exchange to basically make it like a fully vertically integrated experience. We thought that was a very compelling idea. If you wanted to buy like 100 ETH calls or like 1,000 ETH calls on chain in any options protocol, like there's no liquidity anywhere for you to do that, even though that's not really considered like a big trade. So we thought the current experience across like all options protocols kind of sucks. So let's just like rebuild the whole stack from scratch in what we think is like the best way to do it. And yeah, that's sort of how we came up with the idea. We've been working on it for 6+ months. It's a very, very technically complicated project. So we've had to hire a bunch of people, rebuild a lot of stuff from scratch, and it's like much more difficult than building like an on-chain DeFi protocol.
I can only imagine. With all of this, it sounds like from a business perspective, putting a lot of focus into building a full service product suite for users that they don't necessarily have to leave kind of the Ribbon ecosystem at any stage, which is pretty cool. Outside of that, what would you say is your core business focus, like internally? What is driving your development, and how are you tracking these?
I think right now we are less concerned with sort of protocol revenue. We think what's more important now is for us to dominate different product categories. We are already like dominant in the DOV space. I think we have more than 60% market share. In terms of like DOVs, we've done like over $10 billion of volume. So I think we are like the winner in that category. And now the sort of thought process is like, okay, how do we become winners in these other major categories? So lending, for example, and options, we think these are two potentially big categories. So our focus now is like, how do we drive adoption into these new products so that they clearly become the winner in their category? And in the next cycle, it would be much more important to be like the winner in a category versus a cash cow that's like small. So that is how we think about which opportunities to pursue.
It sounds like you're on the right path to doing that. Now, as if you haven't already done enough, I'm still going to ask, what's next? So what can we expect to see in the next 3 months?
A lot of our dev focus is on Aevo. So the main thing that we are working on now is just getting Aevo out the door and getting people actually using it. So we are spending a lot of time and energy making sure the actual public launch is going to be sort of smooth sailing. The next time we do this, hopefully it'll be live and there'll be some interesting metrics to talk about there. But otherwise, we are still growing the lend business and the vault business. We think those are still like also pretty early. So we're doing a lot of stuff just to grow the TVL on those platforms as well.
Awesome stuff. We'll definitely have a new session once Aevo is live and we have some metrics there. But thank you again, Julian, for an amazing overview of everything that's happened at Ribbon, and kudos to the whole team for working so hard on getting everything out there. It's been an impressive last 3 months. Thanks, man.
Thank you very much.